bump. It rhymes. It's clever. People like it. The Dow is up by over 1,400 points, or nearly 8% since the election, which is quite a bit. So what does it mean for the average investor? Gene Marks is a small business advocate, owner of the Marks Group, a business consulting firm. He's also a columnist for the New York Times and Forbes. So here we are on track for potentially another record close. What do you make of this rally that we've seen over the last few weeks?
It is the Trump bump. Well, first of all, whenever people are asking you, what do you think is going to happen to the stock market, right? I always think, like, if you listen to the experts, those are the same guys who were predicting the market was going to drop 1,000 points.
Absolutely.
There's a lot of confidence out there, Jenna. There really is. And I don't know if that's all playing into the market itself, but, my company, we serve like 600 small and medium-sized clients around the country. I speak to a lot of business owners. I write for business. And people are expecting good things from this administration. It's very pro-business.
So let me ask you about those numbers as we take a closer look at the stock market,
Sure.
Because some might be thinking, okay, how am I going to play this in the year ahead? Is the market rally based on emotion, or is there some actual strong fundamentals that are supporting such a rally?
Mostly psychology. The fundamentals themselves really haven't changed that much. It's more expectations of what people are going to think are going to happen next year. But let's be for real here. When I advise my clients, I tell people that, look, things are good. I mean, Trump's coming in. He's promising tax cuts. There's going to be things happening in healthcare. There's consumer confidence is up. All that is good stuff. But there's a lot of headwinds that we're looking forward to as well. I mean, oil prices are going to be going up. We just saw that today with OPEC's announcement. There's going to be a lot of uncertainty with the Healthcare Reform Act. Interest rates are definitely going up. I mean, this year and probably next year as well. So, when I tell people before you start jumping into the market, remember, there's going to be a lot of issues that you're going to be looking at. Look at, potential trade with China.
I'm glad you brought that up. Let's talk a little bit about some of those things that you just mentioned bit by bit. One of them is debt.
Yeah.
We look at our debt clock, and when you see it, it continues to go up really by the moment. Here we are almost at $20 trillion of debt, and some say this is the Achilles heel of our economy, and consequently the stock market, because, hey, there's a lot of folks that own our debt, including China.
Yeah.
So have you heard of a plan? Do you think we have some new energy that's going to address this issue and make that number go down, or at least slow it down?
The answer is no, actually. Trump's tax plan that he is proposing, which is really awesome for a lot of businesses, including my own company, wants to reduce our taxes. A lot of pundits and think tanks think that it's going to contribute another $10 trillion to our national debt. So you don't like $20 trillion in national debt. How about $30 trillion in national debt? That is a frightening
And just
thought.
Playing it out, there are those that believe we're going to get to a point we could, and there's those that disagree with that, where the folks that are lending us money say, you know what, you are never going to pay us back,
right?
So we're not going to do it anymore.
That's exactly right. But then again, you have people on the other side, and some respected economists that say, listen, it's kind of like buying a house. If you've got the ability to service your mortgage, you can service the debt. If the government can do that, doesn't really make a difference how much debt we have. And if you're going to cut taxes, that grows the economy, and that's a good thing. The bottom line is that I'm not sure anybody knows the answer when it comes to our national debt. Is 20 trillion too much, or is 40 trillion too much? So if you're investing in the markets, unless you are in the business of doing that, for your life, my advice is always just you should be working with somebody that does this for a living and really trying to be, conservative.
Let me ask you something more in the short term, which is the Fed meeting and whether or not interest rates are going up. It is expected that they will.
Yep.
What do you think is the real impact on the average American of that?
Zero. I really do. it's 25 basis points, which is actually nothing. I don't know a single client, business who's looking to raise money or get some financing that would think like, geez, 20, oh my God, I'm not going to go with this financing because of this 25-point. But it could actually go up another full point, and I still don't think it would make a big business, at least for most of my clients and the people that I talk to. So we've got a ways to go before I see that impacting the economy. However, these things do kind of build up over time. And so you and I might be talking a year from now in December, and some of these things are weighing down on us.
Well, I hope we are talking a year from now, and hopefully nothing's weighing down on us.
Me too.
We'll keep it light and easy. Gene, great to have you on the program.
Thanks,
Thank
Jenna.
you. John?
Well, the